The topic for this video is CFA Institute Investment Foundations Program, Module 1, Chapter 1, The Investment Industry, a Top-Down View. Module 1 of the CFA Institute Investment Foundations Program only has one chapter, The Investment Industry, a Top-Down View. The weighting on the exam is 5%, so that would translate into 6 exam questions. There's 7 learning outcome statements. Then if we're targeting 100 hours to study, this module would be then studying for about 5 hours, and there's 28 practice questions in the learning ecosystem. Here are the 7 learning outcome statements for the chapter. After completing this chapter, you should be able to do the following. A, describe the financial services industry. B, identify types of financial institutions, including banks and insurance companies. C, define the investment industry. D, explain how economies benefit from the existence of the investment industry. E, explain how investors benefit from the existence of the investment industry. F, describe types and functions of participants in the investment industry. And finally, G, describe forces that affect the evolution of the investment industry. The objective for these videos is to cover some key points from the chapter. The chapter is about 20 pages. We're not going to cover all the detail page by page, just going to help you get started by looking at some of the key points. I'm also going to give a reminder of some of the study process tips because this is chapter 1. We're just getting started. And finally, I want to bring some quick real-world examples to complement the text, and these will be a Canadian focus. The plan is to keep these videos under 20 minutes, so the bulk of the studying is going to be self-studying, going through the text, making your notes, making your flashcards, and doing the 28 practice questions, and when you get something wrong, going back to the text and following up. The first study tip is that on the left-hand side, I've got the syllabus open. It's got all the learning outcome statements for the chapter. And on the right-hand side, I've got the chapter open in the PDF text, and I've scrolled down to the summary. So a reminder is that when you're in review mode, or sometimes before you jump in to the chapter to look at the curriculum, sometimes what I'll do is I'll look at the learning outcome statements and read the summary first, because you can see that there's a pretty good matching up. However, you need to be cautious because it is a summary. There is a lot of content in the curriculum that can be tested, and if you only studied the summaries only, definitely that's not the way to go, but it is a good, perhaps a good way to start. So for example, if you look, I just want to show a quick example. If you look at the 4th bullet point over here with from the learning outcome statements, explain how economies benefit from the existence of the investment industry. Well, you can see here, if you go down to the 3rd and 4th bullet points, it's addressing that learning outcome statement fairly directly. The investment industry provides numerous benefits to the economy, including the efficient allocation of scarce resources, better information about investment opportunities, products and services that are appropriate for providers and users of capital, and liquidity. And the next point is the benefit for investors of a well-functioning investment industry include a broad range of investment products and services that meet their needs, competitive markets that provide liquidity and keep transaction costs low, timely and efficient disclosure of information, and the ability to modify their risk exposures. So that's addressing the learning outcome statement, explain how investors benefit from the existence of the investment industry. Okay, so I just wanted to point out to you that the importance of the summaries, they usually line up to the learning outcome statements quite well. So sometimes it's a good place to start your reading to get just an overall view of what's going to be in the chapter. So now we'll review some of the main points from the chapter. The financial services industry. Well, the financial system helps link savers who have money to invest and spenders who need money. Within the financial system, the financial services industry offers a range of products and services to savers and spenders and helps channel the funds between them. So savers include individuals and households, companies, and governments that have money to invest, and the spenders include individuals, companies, and governments. Exhibit 1 in the textbook is showing a nice graphic for the overview of the financial services industry. And basically, you can see that savers are providers of capital and spenders are users of capitals. And the financial intermediaries channel funds from savers to spenders. Learning outcome statement B is identify types of financial institutions, including banks and insurance companies. So this slide is looking at some information regarding banks. Banks collect deposits from savers and transform them into loans to borrowers. Banks are also called deposit-taking institutions, DTIs. Often, that's an important thing to understand. Is that often you see an abbreviation, DTIs. It's deposit-taking institutions. They take deposits. And building societies, also called savings and loan associations in some countries, specialize in financing long-term residential mortgages. Retail banks provide banking products and services to individuals and small businesses. These products and services include checking and savings accounts, debit and credit cards, and mortgage and personal loans. Cooperative and mutual banks are financial institutions that their members own and sometimes run. And in Canada, we call those credit unions, okay? A little bit different than the retail banks. Credit unions are owned by their members. Moving on now to insurance companies. Insurance companies help individuals and companies offset the risks that they face. There are two main types of insurance companies. One is property and casualty insurers that cover assets such as homes, cars, and businesses and legal liability. And the second type of insurance company are the life insurers that pay out a sum of money upon death or serious injury of the person insured. So a very important point to note is that insurers are amongst the largest investors. Learning outcome C is define the investment industry. So the important thing to understand is that the investment industry is a subset of the financial services industry, okay? And it is composed of the participants that are instrumental in helping savers invest their money and helping spenders raise capital in financial markets. And the investment industry provides numerous benefits to the economy, including 1, the efficient allocation of scarce resources, and 2, better information about investment opportunities, products, and services that are appropriate for providers and users of capital and liquidity. So again, these slides are just looking at some of the main key points. You'll want to go to the text and make sure that you thoroughly cover off all the content within the curriculum. Just a quick graphic to reinforce the point that the investment industry is a subset of the financial services industry. And how do savers invest their funds and borrowers get the funds that they require? Well, here's a list of some of the participants in the investment industry: exchanges, stock exchanges, brokers, dealers, planners, and analysts. As I mentioned, one of my objectives for the videos is to bring a little bit of the real world into the classroom, and we're going to be using some Canadian examples. So this is not in the textbook. It would not be tested, but I want to include it to give candidates a more broad understanding of some of the key points that are fairly important to understand. So we're going to be looking at the Toronto Stock Exchange here. And the first thing to note is that the stock exchanges around the world are broken down categorized into a number of different sectors. So we can see the Toronto Stock Exchange has 10 sectors: financials, energy, industrials, materials, consumer discretionary, telecommunication services, utilities, consumer staples, information technology, and healthcare. And the reason why I think this is fairly important is you can see that the financial sector has the greatest weighting on the Toronto Stock Exchange, over 36, close to 37%. Now, how do we calculate that weight? That's based on market capitalization. And market capitalization is simply the number of shares outstanding for all the companies that are listed, categorized as a financial company, times the market price, okay? And that gives us our market capitalization, and we can see that financials are the largest. And then if we look at the top 10 constituents by market capitalization, so these are the largest companies on the Toronto Stock Exchange, Number 1 is the Royal Bank of Canada. Number 2, Toronto-Dominion Bank, Bank of Nova Scotia. Then down here we've got Bank of Montreal. Another company that's included in the financial sector is Brookfield Asset Management. So we're looking at the investment industry, the financial services industry. We can see that financials are a key sector with regards to the Toronto Stock Exchange. So just quickly here, I'm at the website for the Toronto Stock Exchange. It's www.tsx.com. And you can see if I scroll down, here is the Toronto Stock Exchange, the index. This is how we measure performance of a stock exchange. And the index for Toronto is called the S&P TSX Composite Index. So if I click on that chart, it's going to bring up the quote for the Toronto Stock Exchange. And you can see that on Friday, it closed at 13,935.44. That's the level of the index. And it was down over 200 points, which was down negative 1.46%. And that was Friday, December the 23rd, 2018. Okay. And again, you can look at the 5-year charting, 10-year charting, etc. But more importantly, what we want to do is we want to look at the financial sector to give us some more information about the financial services industry in Canada. So now I'm looking at the S&P TSX Cap Financial Index. So this is looking at the financial sector, okay? And so if I scroll down here a little bit, we can see that the number of constituents is 27. So that means on the Toronto Stock Exchange, there's 27 companies that are classified into the financials sector, okay? The average market capitalization in Canadian dollars, 24.75 billion. The largest, 132 billion, and of course that would be RBC Bank because that's the largest company on the Toronto Stock Exchange. The smallest, 612 million. And so the important thing to understand is that there can be exchange-traded products. These are mutual funds that trade on the exchange that track and replicate the performance of the index. And sometimes that's a good place to get more information with regards to the index. So in particular, I'm looking at this one here, the iShares S&P TSX Cap Financials Index Fund. The ticker symbol is XFN. I will look at that later to show you where I can drill down and get more information, because here if I click on constituents, it's going to give me the list of the 27 companies that are included, but it's in alphabetical order, and they're not going to give me their weightings in terms of the market capitalization, but I can get that from an index fund, the data from that website that's the fund that's replicating this index. So if I look at the sector in the top 10 though, and scroll down a little bit, we can see the top 10 companies. And in Canada, the top 10 companies in the financial services index are the Royal Bank of Canada, Toronto-Dominion Bank, Bank of Nova Scotia, Bank of Montreal, CIBC, Brookfield Asset Management, Manulife Financial Corporation, Sun Life Financial Corporation, National Bank of Canada, and Fairfax Financial Holdings. Now again, they're the top 10 by market capitalization, which is the number of common shares outstanding times the market price. So Royal Bank of Canada, not only the largest financial company by market cap, but it's also the largest company in Canada by market capitalization. Okay, very quickly, I'm at the BlackRock iShares website for Canada. And this exchange-traded fund, the ticker symbol XFN, replicates the S&P TSX Cap Financials Index. Okay, so I'm not promoting or recommending this fund in any way. I just wanted to point it out that we can get some information from the stock exchange website, but often if you look at a product that is meant to replicate an index, sometimes you can get a little bit more information a little bit easier. And so the performance, of course, is going to replicate the sector. But it's here with regards to the holdings. We can see that we have the top 10 holdings, which is going to be the same from from the website. But not only that, we can click on all holdings. And importantly here, we can download the holdings. And sometimes that gives us a little bit more insight to the companies that are making up the sector. So I downloaded those holdings and I put it into Excel. So you can see here's the 27 companies that are included in the financial sector on the Toronto Stock Exchange. And this is the weighting within the sector, not the weighting on the Toronto Stock Exchange, but with the weighting within the financial sectors. And it rounds up to 99.75%. The other 0.25% would be a cash holding. Okay. So you can see that, and here this column I've put in some of my own notes with regards to the nature of the business. So you can see the top 5 companies are the big banks: Royal Bank of Canada, Toronto Dominion, Bank of Nova Scotia, Bank of Montreal, CIBC. And then we have an asset manager in the 6th place, Brookfield Asset Management. And then we get into the insurance. These are life insurance companies: Manulife Financial, Sun Life Financial, another bank. Fairfax Financial Holding is a holding company. And then here we have a property and casualty insurance company, Intact Financial Corp. Okay, so when we're looking at the curriculum for the Investment Foundations program, it's talking about some of the key participants in the investment industry and financial services industry: banks, insurance companies, property, and the insurance was broken up between life insurance and property and casualty. Well, there's an example of a Canadian property and casualty company, and here's examples of the Canadian life insurance companies. Okay, and you can see the relative size, their ranking within the sector for financials. Okay, and there's private equity corporation here, Onyx, a fleet management company, which is considered to be a financial, and then some of the smaller banks from western and eastern part of Canada: Canadian Western Bank, Laurentian Bank. Okay, so that's the 27 companies that make up the financials sector on the Toronto Stock Exchange. Moving on to Learning Outcome Statement D, explain how economies benefit from the existence of the investment industry. Well, there's 4 key points here. Economic benefits: contributes to the efficient allocation of resources, so matching up savers with users of capital; provides and processes information about investment opportunities; packages investment opportunities that satisfy the needs of investors; and number 4, provides liquidity. Moving on to Learning Outcome Statement E, which is explain how investors benefit from the existence of the investment industry. You can see there's 1, 2, 3, 4, 5 main points from the text. Number 1, broad range of products and services. Number 2, creation of new investment products. Number 3, competitive markets with low transaction costs. So when markets are more competitive, transaction costs go down. Number 4, access to information and investment services. And number 5, the ability to transform or transfer risk. So again, these are just the main points from the text. To get more information, you need to go in and continue to read the chapter. On page 11 and 12 of the text, it talks about the need for laws, regulations, and trust. So why do we need laws, regulations, and trust? Number 1 is to prevent fraud. Number 2 is to protect investment market participants. And number 3 is to promote and maintain the integrity, transparency, and fairness of financial markets. Because laws and regulations cannot cover every situation and cannot prevent every fraud or market abuse from happening, it is important that individuals in the investment industry behave ethically in accordance with a set of moral principles and act professionally. And number 2, organizations promote cultures of integrity. Now, of course, chapter number 2 is going to be on ethics and professionalism in the investment industry. So we're going to spend a whole chapter on ethics coming up after this chapter. Okay, just want to take the time here to point out a quick study tip. As I mentioned, I do like to have the PDF books, and I like to have printed copies because I can make notes and flip back and forth. I find a little bit easier than flipping back and forth through an ebook. And they've got the page numbers. The ebook doesn't seem to have a lot of page numbers. Now, with the ebook, though, you can just want to point out some functionality here that you can bookmark and do some highlights, highlight and make some notes. But remember, when we're in the practicing mode, if we reset the chapter, we're going to lose those highlights and bookmarks, okay? But one of the things that I wanted to point out here that is quite neat is that while you're reading through, if you want to practice a question, you can click on the icon up. You can see this icon right here is to practice a related question. So I've just been reading through the need for laws, regulations, and trust. And if I click here, it'll bring me up a practice question right away. You can see here a major benefit of competition in financial markets for the individual investor is A, risk transfer, B, lower prices, or C, greater integrity. Well, competition usually brings lower prices. I'll click on B and confirm that. And yes, I was correct. Again, the level of difficulty is fairly easy, and it's going to tell me why I got the answer right. And again, it's matching up to the learning outcome statement E, explain how investors benefit from the existence of the investment industry. Moving on now to learning outcome statement F, describe types and functions of participants of the investment industry. Okay, so there's 6 slides coming up with regards to this learning outcome statement. I'm going to try to move, this is summary, going to try to move through it fairly quickly. So in terms of some of the participants, number 1, there are brokers that act as agents. That's the key word there, connecting buyers and sellers. Number 2, there's dealers. The difference between brokers and dealers is that dealers act as principals by trading their own capital. Okay. Number 3, another type of participant in the investment industry is clearing and settlement agents, and they confirm and settle trades. Moving on to number 4 here, custodians and depositories. They hold money and securities on behalf of their clients. Number 5, another participant in the investment industry is financial planners. They identify financial needs and provide investment advice to individuals and families. And finally, number 6, we've got investment management service providers, and they manage investments on clients' behalf. I've mentioned the importance of the glossary, and I just wanted to point out we just went through some terms there for brokers, dealers, custodians, etc. All those terms and vocabulary are included in the glossary. So here you can see I've highlighted brokers, trading services providers who act as agents and in exchange for a commission arrange trades by finding sellers for their clients who want to buy and buyers for their clients who want to sell. So again, the glossary is very important. When you see a term, go check the definition in the glossary. Just finishing up with the example of the glossary here, you can see the definition for custodians, typically banks and brokerage firms that hold money and securities for safekeeping on behalf of their clients. And you can see the definition there for dealers, trading services providers who participate in their clients' trades and stand ready to buy or sell when their clients want to sell or buy, providing liquidity and profiting when they can buy securities for less than they sell them, also called market makers. So more information there to complement the summary slides that I just showed you. Now we're looking at investor categories, and it's important to understand that categories is basically 2 broad categories. We're looking at individual investors, and the subset of that is the high net worth investors. You often see that as HNWI, high net worth investors, and the sort of the global definition of that is $1 million US in investable assets, not including your principal residence. And then you have retail investors, which are individuals and families. So those are the individual investors. The other category of investors are institutional investors, which is made up of pension plans, endowment funds, foundations, sovereign wealth funds, banks, and insurance companies. Remember, insurance companies are big investors. So when you put together the individual investors, high net worth and retail, plus the institutional, that's the investors, okay? And the investors made up of individual and institution. Those are the 2 broad categories. So a quick graphic here for investors. And again, that's individual or institutional investors want to buy or sell shares. Well, it's going to go through either a broker or a dealer. And again, the broker acts as agents for the investors, and dealers buy and sell from their own accounts. Brokers and dealers both provide liquidity and help reduce transaction costs. And some other participants in the investment industry are the clearinghouses, settlement agents, custodians, and depositories. So this slide is relating to the text, section 6.1, how companies and governments raise capital. And this slide is showing an example of how companies raise capital. And it's talking about raising capital for the first time, which is called an initial public offering or an IPO. So in terms of the issuer here, this would be a private company going public or raising for the first time. So it's called an initial public offering. So it's moving from a private company to a public company. And there's lots of different examples in different countries and markets around the world. Typically, when that happens, they get the assistance of an investment bank to arrange the IPO. And those shares are sold to both individual investors, again, retail and high net worth investors, and to institutional investors, the pension plans, endowment funds, foundations, sovereign wealth funds, banks, and insurance companies. Okay, so companies raise capital through issuing securities in the public markets. The first time they do it, it's called an initial public offering. Okay, so this is the last slide with regards to the learning outcome statement describing types and functions of participants in the investment industry. So if we just start from left to right at the top here, we can see here on the left-hand side, some of the participants are investment information service providers that provide research and data. Examples of this would be Bloomberg, Thomson Reuters, and FactSet, three of the big companies that are data providers. Up here on the top, you can see financial planning service providers. Financial planning is typically dealing with retail investors and families and high net worth investors. Also, you've got asset managers also catering to retail and high net worth investors. Down here, we've got the financial markets that are made up of exchanges, brokers, dealers, clearing and settlement agents that help assist in providing the trading services. And hand in hand with the trading comes the custodial service providers. And over here on the right-hand side, you can see the investment banks are a link between institutional investors, high net worth investors, who are savers and lenders, providers of capitals, to borrowers and users of capital, such as companies and governments. Okay, so a little bit of a graphic to complement the text, and the last slide for describing types and functions of participants in the investment industry. So this is the last PowerPoint slide, and we're down to the last learning outcome statement for Chapter 1. Learning outcome statement G, which is describe forces that affect the evolution of the investment industry. So the first thing to note is that they've broken it up into two categories here, external forces and internal forces. And two external forces are regulation and globalization, and two internal forces are competition and technology. So it's important to not only memorize these four forces, but if we go into the text under technology, we can see that one of the main things under technology is computerization. And with regards to computerization, it has helped to decrease trading costs. Okay, so again, just to point out that these are summary slides, but there's more information in the text. Okay, so that's the last PowerPoint slide. We're going to conclude this video just by going into the learning ecosystem one last time and showing one key point. Just going to finish this video up back in the learning ecosystem, and you can see here that it's the last learning outcome statement, describe the forces that affect the evolution of the investment industry. After that, you get into the summary, which I said is very important. In fact, you may want to print out just the summaries into a binder on their own that are good for review. But again, they don't have all the information that is going to be tested. Okay, so again, just a quick reminder that when I'm in a section, I can practice a related question. So globally, regulation of the investment industry has A, increased, B, decreased, or C, remained stable. Well, we know after the financial crisis in 2008 that there's been an increase in regulation of the investment industry. So I'm going to choose A. And yes, that is correct. Globally, there's been a growing trend toward greater regulation in the investment industry. Okay, so now I've done practicing. I'm going to go out. So once I've finished, reading through the chapter, as I mentioned, it's very important to do the practicing while you're reading through and at the end of the chapter. So now I would click here. The next thing that I would do is I would resume my practice, and I would go and do the rest of the practice questions 25. When I make a mistake, I'm going to go back to the text and see where I made that mistake. Okay, so one last practice question here. The financial service industry benefits the economy by providing a link between providers of capital. So people are saving and investing. So who are they linked to? Well, it would be the borrowers. Okay, so I'm going to click C. And yes, I've got that correct. The financial services industry exists to provide a link between providers of capital, also called savers, lenders, or investors. So again, different terms meaning the same thing, that have funds to invest, and users of capital, also called spenders or borrowers. So again, be familiar with the vocabulary, and that was relating to learning outcome statement D, explain how economies benefit. Okay, so done practicing. Again, in the learning outcome statement, learning ecosystem, you've got the lessons, you've got the flashcards, and most importantly is the practice. You've got to practice all the questions, and when you make a mistake, go back into the text and investigate, make a flashcard. And that is the conclusion for this video on Module 1, Chapter 1, the investment industry, a top-down view, part of the CFA Institute Investment Foundations program. Thank you.